Blockchain.
Blockchain.
Blockchain technology, first popularized through digital currencies like Bitcoin, is now shaping global economies by introducing secure, transparent, and efficient digital record-keeping systems. As a decentralized ledger, blockchain speeds up transactions, enhances accuracy, and streamlines international trade by simplifying many traditionally complex processes. In conventional supply chains, extensive paperwork, limited visibility, and regulatory requirements often cause delays and inefficiencies. Blockchain solves these challenges by recording each transaction securely and giving all parties real-time access to data. This transparency helps reduce regulatory delays, lowers paperwork needs, and speeds up customs processing, leading to faster global shipments and smoother international trade. Furthermore, blockchain improves traceability of goods, which is especially crucial in industries like pharmaceuticals and luxury items, by tracking products from production to sale. This detailed tracking reduces fraud and supports high-quality standards. Blockchain also enables secure, affordable cross-border payments, which benefits small and medium-sized businesses, SMEs, and supports new financing models like peer-to-peer lending. Governments and trade organizations can use blockchain-based smart contracts to manage trade agreements more fairly and ensure resources are used effectively. While regulatory challenges and environmental concerns exist, blockchain's potential to secure and streamline global transactions suggests that it will continue to drive digital globalization and foster global economic cooperation. The decentralized nature of blockchain makes it uniquely suited to improve economic inclusion, especially in remote or marginalized regions without access to traditional banking systems. Blockchain enables secure transactions through mobile devices, allowing people without bank accounts to access low-cost financial services. This empowerment supports small-scale entrepreneurs, boosts local economic growth, and allows individuals to participate more fully in local and global markets. Blockchain-based digital identities are another vital tool, helping people without official identification gain access to banking, legal systems, and essential services, enhancing their security and access to resources. Moreover, blockchain facilitates faster, cheaper remittances, making it easier for people in developing areas to receive funds from family members working abroad. This capability directly impacts the well-being of families in these regions. Additionally, blockchain is transforming land registry systems by providing tamper-proof of ownership, which can be used to secure loans, leading to further economic empowerment. In public administration, blockchain reduces administrative costs and lowers the risk of corruption in welfare distribution, helping to ensure that support reaches those who need it most. Although barriers like technological literacy and device access still exist, blockchain's potential for inclusivity and financial access holds great promise for underserved regions, especially if these challenges are carefully addressed. Blockchain also has far-reaching effects on traditional currency systems and monetary policies. Digital currencies, such as Bitcoin, operate on decentralized networks independent of central banks, which limits governments' control over economic management tools like interest rates and money supply. This decentralization could complicate efforts to control inflation, a core function of monetary policy. With digital currencies, control over the money supply shifts to decentralized networks, potentially reducing central banks' influence and making economic cycles more volatile. A second major effect is on capital flows, as digital currencies facilitate cross-border capital movement without traditional exchange rates, which can affect global exchange rates and investment dynamics. The ability to move capital more freely could increase global trade and investment, but may also heighten the risk of capital flight, especially in countries with less stable currencies. Financial stability could also be impacted by cryptocurrency volatility, which can lead to speculative bubbles. If digital assets are widely integrated into mainstream financial systems without proper safeguards, they could pose significant risks. Digital currencies add further complications for tax regulation and compliance with anti-money laundering (AML) standards, as their cross-border nature can make tracking transactions difficult. As a countermeasure, central banks are exploring central bank digital currencies (CBDCs), which combine blockchain's benefits with central oversight. This development could help retain policy control in the digital era and promote financial inclusion, but comes with its own technical, regulatory, and privacy challenges. Blockchain's role varies between developing and developed economies, showing how context shapes its applications. In developed economies, blockchain is mainly used to enhance and secure established financial, legal, and business infrastructures. For example, blockchain can securely manage health records, personal data, and streamline financial transactions. However, institutional resistance and complex regulatory frameworks can slow adoption, particularly in areas where well-established systems already exist. In contrast, developing economies often view blockchain as a way to tackle structural issues like corruption, limited banking access, and poor infrastructure. Blockchain's decentralized financial services can foster economic inclusion by providing people in remote areas with access to basic banking services. Countries such as Estonia, Georgia, Venezuela, Singapore, and the Philippines highlight blockchain's impact on national economies. Estonia has become a leader in digital governance, using blockchain to secure public records. Its blockchain-based X-Road system manages everything from medical records to voting and business registrations, increasing transparency, improving service efficiency, and reducing corruption. Georgia uses blockchain for land registration, decreasing fraud in real estate by maintaining immutable land records. Venezuela, amid hyperinflation, launched its cryptocurrency, the Petro, to access international financing despite sanctions, illustrating both blockchain's strengths and challenges in stabilizing national economies. Singapore's Project Ubin shows how blockchain can reduce transaction costs in financial services, supporting its growth as a fintech hub. In the Philippines, blockchain is enhancing financial inclusion by allowing people in rural areas to conduct secure transactions even without traditional bank accounts. These examples showcase blockchain's adaptability in addressing issues like transparency, economic instability, and financial access in different national settings. Looking forward, blockchain is expected to reshape global economic systems as profoundly as the internet did in recent decades. One significant impact is anticipated in financial inclusion, as decentralized platforms democratize access to economic resources for underserved populations. In supply chain management, blockchain's transparency can reduce inefficiencies and ensure compliance, an increasingly crucial factor as consumers and regulators call for greater accountability. Governments may adopt blockchain to improve transparency and cut down on corruption, potentially transforming areas such as welfare distribution, identity verification, and public records management. Smart contracts, which automatically execute agreements when conditions are met, are expected to reduce dependency on intermediaries, lower transaction costs, and speed up business exchanges. Decentralized autonomous organizations, DAOs, could redefine corporate governance, creating more transparent and democratic business structures. Yet challenges like scalability, energy consumption, and a complex regulatory environment must be overcome to fully realize blockchain's potential. Blockchain technology offers a transformative path to a more inclusive, efficient, and transparent global economy. As the technology matures and its advantages become clearer, blockchain is likely to drive major changes in economic systems, redefining financial services, government operations, and international trade.